We now turn to housing in the U.S., where, following the Great Recession, which was predicated on those bad mortgages, we've seen a decade of booming housing markets. To help us out, we are joined by Debbie Bloyd, the CEO of DLB Financial Services, and Boris Richard, a managing director at FTI Consulting. Hey, guys, thank you both for being with us, making the effort. Let's start by getting a little bit of a baseline. Debbie, it's so good to see you first time this year. The last 10 years have really been great, haven't they? I mean, for prices and sales, right?
Isn't it funny that when 2008 happened, we thought that the world was coming to an end and we could never recover? Now, 10 years later, we're looking back like it was the best of times. The best thing that happened was that interest rates went way down. That allowed so many more people to purchase a home than ever before.
And Boris, what's your take sort of on, the last decade, just generally?
I mean, generally, there have been, a few interesting trends. Number one, the underwriting standards remain, fairly conservative in the mortgage universe. You look at the credit scores, which are significantly higher compared to pre-crisis. The loan-to-value ratios are significantly lower. You don't have right now exotic products like, option arms and other, complex mortgage instruments. And again, the lenders are requiring much more of a full documentation for the borrowers, again, in contrast to what was happening, right before the crisis. So I would also mention, there is definitely an issue with a very tight supply of housing in the United States. So you look at the completions, you look at the housing start, they're running really, twice below the pace that you would normally see in these types of expansions if you look at a longer-term horizon. Housing affordability has been declining. I mean, over the past 6 years, probably starting from 2013, the housing affordability was declining because of high home prices. You have had an increase in mortgage rates last year, so that's something to take a note of that. And lastly, I would also mention that the non-agency mortgage market, basically mortgages that are not conforming to the standards of the government-sponsored enterprises, that market has never really fully recovered after the crisis. I mean, it still comprises only 10% of the overall mortgage originations.
Yeah, right. And Debbie, is that what you're seeing? I mean, some of these signs out there that things are slowing a little bit, and how about in your area also?
Yes, things are slowing. People have to have better credit. They have to have money for a down payment. The only loan that's available out there now is a VA loan with 100% and some USDA, but that makes you live in certain areas. So more money, better credit, and then it's, are you able to buy the house that you really want? And a lot of people are finding those are just right over their price points. They want a lot more than they can afford.
I should have said when I said where you are, Debbie, you're in Austin, and you're actually a little west of Austin, right? But are there areas in the country that are doing particularly well now, even though with some of these figures? And how about the other side, places not doing so well?
Oh, sure. I think that, the extreme coasts are going to have problems because rates keep rising. San Francisco's got a huge problem. They've got 4 and 5 people in apartments because they can't afford a home. They can't even afford to rent something by themselves. They're in homes that they just take out a bedroom in. And these are your big IT tech people that are making lots of money. There's just nowhere to live. Texas, we got a lot of space, so come down here. Dallas, they're dropping off 800 or 900 people are moving in a day. There are subdivisions and areas that are booming in North Dallas. So come on, we got plenty of room for everybody.
It is a big state. Hey, Boris, last time, we had, I don't know if it was 7 or 9 million people actually lost their homes with the Great Recession. Are we in that sort of danger this time if the economy goes south, or maybe not so much? What are your thoughts?
Not at all. I mean, the consumer and the borrower is in much better shape these days for a variety of factors. Number one, we have had a solid income growth. Number two, if you look at the equity that people have accumulated, I mean, it's much higher compared to what you had, prior to the crisis. According to some estimates, there is approximately $6 trillion in home equity that people can tap in before hitting the 80% LTV. So obviously, the downturn in home prices is not going to, affect the borrower at the same level, and is not going to create the same pace of foreclosures and delinquencies if you have $6 trillion in equity in your homes. So yeah, we're in much better shape. I mean, you look at the delinquency rates right now for the entire mortgage universe in the U.S., it's at 10-year low. If you look just at the conforming loans, according to some estimates, the delinquency and foreclosure rates are as low as they have been since the first quarter of 2000. So basically, 19-year low. So no, we're in much better shape right now. Plus, you don't have an oversupply and overbuilding of homes. Again, that was one of the major reasons why home prices declined and nosedived in 2007, 2008. You don't have that factor right now playing against the home prices.
Super interesting discussion. Thank you both. Debbie Bloyd and Boris Richard.
Thank you.
Thank you so much for the time, guys. Appreciate it.
Thanks a lot.
Thank you. Bye.